welcome. You're watching NewsX with me, Devika Chopra, and our top focus continues to be the budget. Well, the stock markets, typically closed on weekends, will remain open for trading this Saturday when Finance Minister Nirmala Sitharaman will be presenting the union budget for the 8th consecutive term. Meanwhile, the benchmark Sensex has surged by 741 points and Nifty closed above 23,500 points today, driven by strong buying in Larsen Toubro following its Q3 results and the economic service predictions of a pro-growth budget. The 30-share BSE Sensex index extended its rally for a fourth consecutive day, rising by 740.76 points to close at 77,500.57. What does this really mean? How does one really predict the behavior of the stock markets? We'll try to have the conversation. I have with me Dr. Larsen Toubro with us on the broadcast. Also with me is Ronak Tusu, and we have with us Dr. Jayjeet Bhattacharya, who will be joining in just a short while from now as well. Let me begin with Dr. Larsen Toubro. Sharad, of course, talking about the stock markets, always unpredictable, but I'm going to put you in the spot there. What really can we expect? What can the investors expect after the budget tomorrow?
Good evening, Devika. Good evening to my fellow panelists and NewsX viewers. Well, the markets have been going through a bit of a bumpy ride over the last few weeks, I would say. In fact, since October, the market went to, we talk of Nifty, it went to a peak of 26,277. It's down from that, about 10% correction we've already witnessed across the board, across the mid cap, small cap, large cap, practically everywhere. And it had at one point of time gone down to 22,500 probably a few days ago, but has thankfully recovered. There were a lot of factors which were sinking the market. Some international, some domestic. First of all, the bad news coming on the GDP sluggishness domestically, that was also counting on the minds of the investors. The second was from the US, because ever since President Trump took over, we've been hearing the word tariff more often than not. So that was causing a bit of jitters to the market. And the bond yields in America were hovering around 5%. The dollar index, the FIIs and the FPIs, they have been into relentless selling ever since October. It's been a non-stop selling. 4,000 to 5,000 crores has become the new normal every day. So there are four pillars of stock market, Devika. The DIs and the FIIs as one pillar. The second pillar are the FPIs and the FIIs as one pillar. DIIs as the second pillar. The HNIs is the third pillar, and the retail investors as the fourth pillar. So the biggest pillar, one of the biggest pillar, I won't say the biggest, is the FPR, the FPIs and the FIIs. They have been selling, and it's the reason for sale is because they want to withdraw money out of risky markets. They want to pull the money back into their respective countries. They feel probably at this point of time it's better to keep money. And of course, there was a China factor also. China had given a stimulus of about $1.4 trillion. And I think some of the investors started feeling that probably we might press a reset button and take the money back to China. Some of them had pulled out from China earlier. So there were multiple factors which were counting, and I think it was in a bear grip. There was no doubt about it. But now I think the budget was like a silver lining, where the investors and the traders, there are two kinds of operators, investors and the traders, they were looking forward to this budget, that probably this is going to be a booster dose for the sagging economy, I would say. And I think the euphoria is building up. The economic survey presented today has provided some kind of feelers to the investors and the traders that yes, I think budget is going to be the booster dose. So it's going to be a very positive budget. It is going to provide pace to the economy, which is much needed. It is going to boost consumption, put money in the hands of the middle class, do something for manufacturing, do something for mining, do something for the digital infrastructure, do something for exports out of all. So I think in anticipation, the markets, thankfully over the last couple of days, has shown a significant improvement. I hope, and the market is being open tomorrow for that reason. Normally Saturday is a holiday for the market. But I think such is the euphoria that the markets decided to open to welcome the budget, listen to each announcement, celebrate the announcement, and make sure that that sector climbs. And in fact, overall, the market climbs. So a very positive and a very forward-looking budget is being anticipated in the market, which is why you're seeing this rise, Devika.
Okay, all right. Let me bring in Jayjeet Bhattacharya into the conversation as well. Jayjeet, your assessment of what the union budget may bring to the market.
First of all, the economic survey was like a report card for the economy, and it turned out to be a very good rating that the economic survey has given. It's almost like a grade that we have got in terms of factors that are under our control. So the economy is chugging along. There was a little bit of a slowdown because of a bit of a slowdown in infrastructure spend, in government spend, and also a bit of a weakening in terms of consumer spend. Now, once the infrastructure spend catches up, which is what was happening in the last 2 quarters of this year, and the last quarter is being played out, we will see the income levels of consumers going up. We'll say more money pumping into the economy, and therefore growth will happen. And that's what the economic survey also predicts, that there will be a larger growth in FY26. And hence, what we would be seeing in the budget is focusing on areas which leads to further growth, which means more spend on infrastructure, and would probably also have incentives for the private sector to step in into the infrastructure spend, which was absent for some time because the private sector was not able to participate in the PPP projects because of historical reasons. Also, we'll see tax breaks for the middle class so that they get more money back in their hands so that they are able to spend more, which would also lead to growth happening. In addition, we would see a number of measures in terms of trade remedies, specifically in terms of the basic custom duties being increased on certain products. And that will be just as a reaction to the change in the geo-economics of the world, especially with the Trump administration coming in. There will be products on which the tariffs will be brought down so that we are more aligned to the expectations of the US administration in a manner that it helps India's exports. But also we will be extremely cautious in terms of areas where there is significant dumping happening, especially from China, and therefore there will be areas where the basic custom duties will be jacked up in tomorrow's budget. We also will see a lot of measures in terms of the social sector, specifically the gig economy, as gig economy has turned into a large job generator without the safety net being there. So there will be recommendations that will be made tomorrow, which will help the gig economy workers move more towards something which is a hybrid of a full job and a gig economy, which means that there will be a social safety net, there will be insurances, health insurance, and so on and so forth, that will possibly be enabled in tomorrow's budget. What we also expect is a focus on supply chain in easing up the movement of goods, of manufactured goods, and their movement to ports, their movement to airports so that they can be evacuated and taken to various markets. So I see a slew of these kind of recommendations coming in as part of the budget that will be coming in tomorrow.
Okay, all right. Let me also bring in, on that note, Ronak Tusu into the conversation. Ronak, your predictions as far as the economic survey is concerned, and what could the budget possibly bring tomorrow?
Okay, thank you so much, first of all, for inviting me here at the panel. As the Dr. Jagjit sir and Dr. Sharad sir have already given the brief idea about what are the things we are looking for. The thing which, as a trader point of view, I am basically looking for is the EV segment. EV segment is the main thing which is right now I am looking as a trader part or also as an investor part. Right now, India lags behind in the production of EV segment, and the leader is China right now here in the world overall. We have a GST of 5% on EVs, and the raw material which we use for the EV segment, that is between a GST of 18 to 28%. We definitely like some changes there in that raw material segment. If there is some kind of changes, some relief in that segment of 18 to 28% GST slab for raw materials which are used for EV segment, we can boost here EV sector for the coming tenure in the India, and definitely we want something relief here in that part. And coming to the other part, which Dr. Jagdish said that there is a relief we are looking for. People who are earning less than 10 lakh, we should have a zero tax policy for them under the slab of 10 lakh rupees per annum. That is the main thing we are looking definitely as a part of a budget. And if I go technically wise in a technical form, what are charts, what are charts saying right now? Chart directly, currently we are trading at a level of 23,500. Nifty has already taken a support from previous 22,800 level, which was a major support in the last 6 and 7 months. And we are seeing that from the October past year, FIs are in a continuous selling form. They are continuously selling, dumping 4,000, 5,000 crore every day. And right now, it's currently also the same figures we are seeing, 3,000, 4,000 crores a day, daily dumping. And right now, if we breach those levels by any chance for 22,800 levels, there is a kind of free fall we can expect in the market, which can go up to the level of 20,300, 20,400 level, which is a technical wise area in the market where we can see a gap pending area in the market, which was from the 2023 election result, which was a 4-state election 2023 December second week of 2023. So that's my point of view for the budget we are looking right now here at a chart wise.
Okay, Sharad, bringing you back into the conversation, of course, something that everyone looks forward to is perhaps having some sort of an indication of certain stocks that they maybe need to put into their watch list. What are the sectors that they now need to be looking at as far as the new budgets are concerned? There has been in the past few days, I've also just been keeping an eye on the sort of things that the government has been talking about. We've seen the Prime Minister somewhere sneak in a post about the space sector. We've seen him also, Ashwini Vaishnav has come out and spoken about AI, generative AI. I was just having that conversation with Jayjeet. But from your perspective, is there any particular sector or any sort of stock that you've added to your watch list?
Well, I normally don't speak on specific stocks, but sector, yes, I would put my bets on defense sector, which is definitely, our defense exports have now touched 25,000 crore plus. I would like to put my bets on FMCG. I would like to put my bets on renewable energy. I would like to put my bets on space technology and related sector. Definitely, there's no doubt about it. Even IT, I'm not still averse to IT sector, because that sector, keeps booming every now and then. But let me give you a different picture. Allow me to give a different picture of the stock market. We've seen stock market comprises of corporates, and the corporate results do not sound to be positive, do not sound to be on a rising scale. Obviously, the markets will align to the fundamentals. So the Q3 results, which we have witnessed, have been a bit of a mixed bag. Now the Q4 results also may not be that great, because the budget takes into effect from most of it takes into effect from 1st of April. So the December to March quarter, January to March quarter, may again be a bit dicey. So therefore, we should not start dreaming about the stock market. Momentary rallies in the stock market, Devika, they happen. This is the beauty of the market. The market corrects itself. Every time the market rises, it corrects and books profit. But the larger picture for this year, if I don't sound pessimistic, allow me to comment that this is going to be a highly volatile year for the market, because the geopolitical and geo-economic situation around the world. We should not forget, Devika, when markets open at 9:15 in the morning, before that, GIFT Nifty comes in. And, we take the cues from the American markets, how the Dow has behaved, how the S&P has behaved, how the NASDAQ has behaved. So when we take the cues from them, it is said that if America sneezes, the world catches cold. So the geopolitical and the geo-economic situation is not looking very hunky-dory, if you ask me, because President Trump has been sounding bugles on the trade war with China, Mexico, Canada. He even keeps mentioning out India every now and then, that India is a country, which levies a lot of tariffs. We are going to reciprocate these tariffs and so on and so forth. So I think, and the political situation also is not looking. Russia-Ukraine war is still on. The tension in West Asia has temporarily subsided. I don't know for how long though. So I think there are global factors, and we should not forget, Devika, that the world is right now growing at 2.7%. We were growing at 8.2. We've slowed down to 6.4. One of the reasons have been global headwinds. We've been facing global headwinds because our exports are not growing at the pace we would have wanted to. And now if this President Trump factor comes in, the day President took oath, the market started crashing. Whereas when President was elected in November, we saw Trump rally. But when he took oath and he started using the word tariff more often than not, the market started reacting. The gold, which is considered as a safe bet, started rising. So, the geopolitical factors, geoeconomic factors would have to stabilize for our markets to be rising constantly. And of course, the corporate results, the corporate performance for stock market, that is the backbone, that is the spine of stock market. If the corporates don't give good results, no technicals work. With due respect to my fellow panelists and I have a lot of respect for technical analysts. He's a technical analyst. I have a lot of respect, but then no technicals work if the results are bad. So I think we'll have to wait and watch. Most of the corporate results for Q3 2020 FY25 are out. Some are pending, but I'll be more wanting to look at Q4 results, which is after 31st of March, because that's when the budget will come into effect. So I think it's a bit of a tricky ride for the market for rest of this year. From COVID till today, Devika, very interesting aspect. From COVID till today, most of the investors had not seen major correction in the market. It's been on the rise. You know, we were always talking of bulls, but I think people who walked in, who were new to the market, they probably did not experience that market can go into a correction as well. It has happened several times in the history of stock markets. So I think they are getting a taste of the market movement, the real taste of the market movement, which is, I think, a learning experience where people are gaining, people are learning. Obviously, my friend trader who's on the line, you can earn from a fall as well. The investors have to wait for the stock to rise, but the trader can always earn from a fall. The market has to move, and they can make the money. Although having said that, where SEBI said 85 to 90% people lose in F&O in derivatives. So considering that, I think market should be taken in a larger perspective. Market is not a sole indicator of our economic performance, Devika. We should not forget that. You know, it is just an indicator, a side indicator. But market that's the beauty of the market. It has to go up and down. If it only makes one-way movement, Devika, then I think everybody will have to start beating Mukesh Ambani in terms of its net worth. So let's be realistic. This year overall looks tough for me. But yes, budget for now will provide a booster. I have no doubts about that.
Okay, Dr. Jayajit Bhattacharya, same question for you, sir. Any particular sectors that you've added to your watch list kitty?
So I watch the stock market from the side. I don't jump into it because you need to be in it to really play it. But having said that, I'm bullish about all sectors related to infrastructure. With a population of 1.4 billion, closing to 1.5, infrastructure will be a big play. So will be FMCG, so will be auto. As long as we have, as Dr. Kohli mentioned rightly or indicated, that we have a longer term view and not a short term overnight view, each of these stocks has to grow as long as these are well managed companies. If you look at auto, it takes care of about 20% of the GDP in that sense because of the steel that it consumes, the paint that it consumes, and so on and so forth. But the other thing, I mean, staying away from stock market, and I just mentioned the sectors that I'll be bullish about. The other thing that I'm really looking forward to is ensuring that there's a level playing field for Indian companies, because for Indian companies, many things have got skewed up. Let me take a small example of, let's say, ammonium nitrate. It is based on natural gas. Natural gas elsewhere or from the source is sold at $2, but they ensure that the raw material, when it leaves their shores, is sold at a much higher price. So it lands at $14 in India. And ammonium nitrate is critical for making something like the explosives that are needed for coal mining, and 70% of India's energy is dependent on coal. So during COVID, natural gas and ammonium nitrate was being cut off for India, and that was a chilling effect that India had. So a lot of investment came into manufacturing ammonium nitrate locally. But if those who have got a cheaper natural gas are manufacturing ammonium nitrate and then dumping it into India, that's a huge supply chain resilience issue, that's a huge energy security issue, and that's an issue of not having a level playing field. So what I would look forward to, besides everything else that we predicted, my wish list is to ensure that there is further level playing field for Indian players, and it should not be interpreted as a protectionist measure. It is a safeguarding of our industry and not really protectionist. There is no bravado in letting other countries completely decimate your capacities. So I hope the budget tomorrow also covers some of these very critical aspects that get lost out in the hum of lower taxes and so on and so forth. Our industries are critical for our jobs, and we need to safeguard them.
Okay, all right. I want to bring Ronak Tusu back into the conversation and give him the last word. Ronak Tusu, your perspective on the same for all the viewers that are watching, and perhaps hoping to get some insight on what are some of the sectors to look forward to for the next year.
Okay, as a technical point of view, if I look on the charts related to the market, especially stock market, the major sector which right now I am focusing on is defense sector, railway sector, and the EV sector. We have seen that almost the sector related to stocks related to the defense sector have corrected from around 20 to 30% already from the top of the 2024. And talking about the sectors like EV sector, Tata sector, not specific about the stock like that. Talking about the segments, especially EV, I can see majorly stocks have already corrected also 20 to 25% on the major highs. So these are the main sector specific defense, railway, and the EV, which are majorly I'm looking for. And the stocks are already trading at the demand zone. And the best, as the panel also said, that everything is not specific related to the market itself. Charts are also the way to react to the market, but whenever the news pumps into the market, even the best of the best charts get worst, and even the worst of the worst charts gets best. So news is the X factor here, which we are definitely looking tomorrow for what are the things majorly FM is going to announce there tomorrow, and after that how the market reacts. So major sector is right now for me is defense, railway, and EV from tomorrow onwards. Yes. Yes, yes.
Okay, all right. On that note, let me bring Sharad Kohli back into the conversation. Sharad, I just want, of course, understand from you as well. Besides, of course, the stock markets, how do you think they've reacted really to the economic survey today as well? Besides the budget, how do you think they've reacted to the economic survey? And is that really going to be an indication that we can take forward to the 1st of February as well?
Yes, I think the markets have categorically, given you an indication how, the countrymen have reacted to the economic survey. It's been on a very, very positive note, whereas the challenges have been very categorically mentioned. The plus points, the positive points, the points to look forward to. The outlook has been shown to be very good. It's not as bad as some people would have imagined, But, having said that, Devika, with your permission, since this show is specifically relating to stock markets, so I would like to give a piece of advice to the viewers of NewsX who are big fans of stock markets. My advice is that please come here as a long-term investor. Do not speculate. As I said to Ronak, that 85 to 90% of the people who are into derivative trading, who are into short-term trading, I've seen people buying at 10 o'clock, selling at 10:05, buying at 10:15, selling at 11. Please come here as long-term investor. There's a lot of money to be made in stock markets. And a very important aspect is, whatever be the budget, please make sure that you don't put all eggs in the same basket. Do not remain invested in a single sector. Spread your investment to all the sectors that we've been speaking of, and some of the sectors which we've not been speaking of as well. And also diversify your investment to other asset classes as well. You should have a bit of gold in your asset class, a bit of bank fixed deposit as well, a little bit of mutual funds, a balance of debt fund and equity fund, and of course stock markets. And when you come to stock markets, my sincere advice is, please educate yourself completely. Do not come with half-cooked hear and say information. I find a lot of investors who come with hear and say information. And when the budget comes tomorrow, suddenly you hear about, the finance minister speaking about, this is what we are going to defense, and suddenly, everybody starts pouring in money. For God's sake, listen to the entire announcement. Analyze the impact of that. You would not believe some of the best traders in stock market, Devika, sometimes they take 2 days to understand what this particular provision is meaning. Is this going to be positive for the sector? Is this going to be negative for the sector? Which is why you see the markets sometimes during the budget, they get very volatile. They go up, then they come down. This is the period when the traders and investors are trying to understand, because the macroeconomic impact of these announcements, they get absorbed into you gradually. It percolates into you, and then finally you realize, oh yes, this was good for the sector. And suddenly 2 days after, no, this wasn't too good for the sector. This was good for another sector. So please don't go by hear and say. Analyze, be patient, and market only favors people who do not go by emotions. So you have to be very analytical. Try and educate yourself when you come to market. Most of the people, they come as long-term investors, Devika, and they become speculators. I invested 100 rupees and I invested for 3 years. After 2 months, my 100 became 150. What I do is I sell and get out. Nothing wrong. You made 50 rupees. But it gets you into the habit of speculation, and then you end up losing your entire capital. That is the mistake which people do. So through your show, I just wanted to, it may be slightly digressing from the hardcore budget and stock market relation, but then I thought it would be worthwhile for the viewers to be listening to that as to how to approach the investment scenario. Devika.
Okay, all right. On that note, I do thank all of our guests for joining us, but we have another interesting thread to put out for our viewers. This has been shared on Narendra Modi _IN, which is an account on X, an official account on X, and this essentially says India's growth story in numbers, key insights from the economic survey 2024 to 25, and it's, of course, like I said, it's a thread on X. Let me take our viewers through what are the big pointers that have been put out. Number one, non-fossil fuel power has doubled, which means that we are a step closer to greener, cleaner future for India. Total non-fossil fuel power generation in 1000 gigawatt per hour has increased from 236 to 420. Secondly, India's global services share has doubled, strengthening our position in the world. India's share in global services exports has grown from 1.9% in 2005 to today at 4.3% in 2023. Private spending has reached a record high after 22 years. Private spending share of GDP is projected to reach 61.8% in FY25. This share is the highest since FY03. Next up, empowering small farmers with a 315% credit boost. Growth in credit flow to small and marginal farmers has witnessed a 315% increase. It was at 3.46 lakh crores in 2014-2015, and it's now standing at 14.39 lakh crores in 23-24. Next up, agri credit, we've been told, has soared 201%, powering farmers and further fueling their growth. This is ground level credit to agriculture, which has seen a 201% increase, viewers. It was at 8.45 lakh crores in 2014-15 when the new government took over, and 10 years later the figures stand at 25.48 lakh crores. Highway expansion. 4-lane highways have expanded rapidly, looking at 150% growth over the past decade. So 18,300 kilometers is where we were at in terms of highway construction in 2014. That figure now stands at 45,900 kilometers in 2024, a 315% increase. Breaking new ground, women's patent filings have multiplied in India. This is the next big aspect of India's growth story. Patent filings by women applicants has seen a 345% growth. It was at merely 15 in FY 2015, but it now stands at 5,183. So women empowerment taking place as well. Rural India is now getting more power. The power supply has soared to 21.9 hours a day of power in FY24 compared to 12.5 hours in 2014. The daily average power supply in rural areas has now witnessed a significant increase. Energy gap has also shrunk. India has closed its energy gap to mere 0.1%. The gap between energy demand and supply has now been reduced to 0.1%. It was 4.2% in 2014. It's now 0.1% in 2024. That is, of course, last but not the least. And like I said, this is available for everyone's consumption on X on a handle called Narendra Modi _IN, which is an official handle. And through these infographics, we have understood some of the key insights of the economic survey 2024 to 25. On that note, viewers, we step into a very quick break.